Washington Mutual, or WaMu, was the savings bank holding company which was the United States' largest savings and loan association until its collapse in 2008. Welcome to Eric C. Productions. If this is your first time watching one of my videos, please hit the subscribe button and the notification bell so you get notified of my latest video that is posted daily. Please leave a suggestion on a video and maybe it may show up in the future. Thank you to Juan Serrano who suggested this company. Thanks for watching, and now back to the program.
The uncertainty of getting a home loan made Paul irritable. Then he went to Washington Mutual. Thanks to their flexible lending rules, Paul got a quick approval. Now he's always in a great mood.
Hey! Oops, my bad. No problem. I guess I'm having tea.
Congratulations on your new home, Paul. Glad we could make your day.
You got me.
Washington Mutual sprang into existence in Seattle in 1889 as a two-person operation and eventually became the largest savings and loan in the nation. It began as Washington National Building Loan and Investment Association right after Seattle's devastating fire in 1889, dedicated to helping Seattle rebuild. The fire started with a glue pot. That glue pot boiled over in June of 1889 in downtown Seattle woodworking shop and started the Great Seattle Fire, which left 29 square blocks of downtown Seattle in ruins. The newly formed company made its first home mortgage loan on the West Coast on February 10, 1890. It changed its name to Washington Savings and Loan Association on June 25, 1908. They patterned itself after the already established mutual savings banks of the East Coast. They instituted some major changes, including the elimination of membership requirements. It also gave its customers the right to withdraw deposits at any time. By 1913, the number of accounts jumped almost sevenfold. It was now the state's largest savings institution. On September 12, 1917, it changed its name to Washington Mutual Savings Bank. It was the first mutual savings bank west of the Mississippi. In 1923, it started the school savings program, in which school children all over Seattle saved their pennies and nickels, brought them to school, and then deposited them in Washington Mutual at a 5% interest rate. The program was an immediate and massive success. Within a month, half the school children in Seattle, more than 21,000, had opened accounts. After 6 years, $1 million was on deposit. The Great Depression arrived in 1929 and caused the demise of many banks around the country. In 1941, it acquired Coolidge Mutual Savings Bank in Seattle. Washington Mutual thrived during the World War II years and sold just short of $30 million in war bonds. It took Washington Mutual until 1964 to expand outside of Seattle when it acquired Spokane Citizen Mutual Savings Bank, which had branches in Spokane and Pullman. In 1976, Washington Mutual offered the new innovative pay bills by phone service. The bank was also an early developer of the cash machine, which later evolved into the ATM. Washington Mutual's machine was called the Exchange. In 1976, it introduced a different kind of innovation, the step rate loan, in which the rate starts low the first year and gradually rises for the next 6 years. It resembled, in some respects, what would later be called the adjustable rate mortgage. A recession and a tight money supply forced Washington Mutual to take the extreme step in October of 1979 of granting no more home loans. The bank wasn't able to resume lending on a limited basis until 1980. The bank suffered big losses in 1981 and 1982. In 1983, Washington Mutual made the decision to go public. It converted from a mutual bank to a savings bank owned by holders of capital stock. The stock sale helped the bank recover from its losses. The bank embarked on an aggressive expansion strategy in 1982 by acquiring the Northwest's oldest brokerage securities firm, Murphy Favre Inc., a firm founded in Spokane in 1888, and its sister company, Composite Research and Management. Soon, Washington Mutual was doing business in a number of new areas, including insurance, travel services, real estate partnerships, junk bonds, and commercial construction loans. The bank's new motto was, "The bank that's more than a bank." In 1989, its 100th anniversary, the company built a dramatic new addition to the Seattle skyline, the Washington Mutual Tower. The company began purchasing other Northwest banks at an average of 2 per year. It leapfrogged from 84 branches in 1991 to 248 in 1995. Then it began to expand throughout the entire West, purchasing banks in Oregon and Utah. The biggest acquisition of all came in 1996 when it acquired California's American Savings Bank and its 158 branches. Washington Mutual immediately became the third largest savings and loan in the nation. In the 2000s, powered by a boom in housing prices and a subsequent boom in home loans, Washington Mutual expanded throughout the nation. It became the country's largest mortgage originator and the country's largest savings and loan bank. The growth came in part from subprime loans, which was aggressively marketed to people with bad credit, known as subprime borrowers. It also came from a loan Washington Mutual called the Option Arm, adjustable rate mortgage. It was promoted as all the loan you'll ever need because of its flexibility. Customers could choose from among a variety of rates and payment plans. Many opted for the minimum payments, which were not always enough to pay even the interest. By 2006, as interest rates went up, defaults grew. By 2007, the housing bubble had burst and the subprime lending crisis was making headlines around the country. Washington Mutual was in trouble. It drastically curtailed its subprime lending, and then in June 2008, the bank stopped offering option arms. WaMu's historic collapse. The bank had to raise outside cash from a private equity firm, TPG Capital. Then, in September 2008, nervous depositors, spooked by the government takeover of Freddie Mac and Fannie Mae, embarked on another run on Washington Mutual. Depositors quietly and methodically withdrew $16.7 billion in deposits in just over a week. This created what the FDIC called severe liquidity pressure. In other words, the bank ran out of money. Washington Mutual's proud and long-standing claim remained intact. No depositor ever lost a dime. But stockholders and bondholders weren't so fortunate. They lost everything.
As the debate in Washington rages on about how to bail out the nation's economic crisis, another one of the country's largest banks has collapsed. Washington Mutual has gone under, seized by the Federal Deposit Insurance Corporation on Thursday. The FDIC then turned around and sold WaMu's thrift banking assets to JP Chase for nearly $2 billion.
I'm not going to say that is not going to happen, but no matter what, WaMu has a really impressive severance package, and I think that's going to be carried on even if there is a merger.
Washington Mutual's fall has been widely anticipated. The bank's stock has plummeted 95% of the past year. On Thursday, it closed at only $169 a share. Like many other financial institutions, WaMu fell victim to heavy mortgage-related losses, including the once booming subprime mortgage business. For WaMu employees, nervousness abounds.
Of course, we're going to have some uncertainties and some questioning about what's going on. Have I been nervous? Sure. I mean, it's just kind of the nature of the whole beast. When a large company gets bought out, you wonder about your job. Our head's going to roll. You just don't know. But we have faith in our bosses and the people upstairs.
Washington Mutual was founded nearly 120 years ago and is by far the largest bank to fail in the country's history. WaMu is JP Chase's second acquisition this year. In March, JP bought the investment bank Bear Stearns. JP Chase is now the second largest bank in the country, only standing behind Bank of America. JP Chase says the acquisition will give it 5,400 branches in 23 states. It plans to close less than 10% of those. Orla Risi, Associated Press.
Hey, if you just watched my video, thanks for watching. Hit that like button and please subscribe to Eric C. Productions.